What's up traders, welcome to Failure to Displace. In this video we're going to take a look at this morning's London session around EURUSD and the London macro number 1. I'm going to give you a bit of a breakdown of the macro strategy that I'm employing at the moment, which is allowing me to trade just 54 minutes per day over the two London macros. So with that said, let's jump into the analysis now and see how this potential trade presented itself. So before we jump into the main charts, I'm going to just take a second just to run you through the beta version of the trading plan that I've put together. I've labelled this beta because this isn't the final trading plan. I'm still ironing out the kinks on this one, working out how best to utilise this strategy. However, this is what I've got so far. So I'm only trading the London macros, 2:33 to 3 AM. And then 4:03 to 4:30 AM. I appreciate there's some discussion at the moment as to whether these are valid ICT macros or not. After a recent live stream that ICT has done saying that macros are all 10 minutes before to 10 minutes after the open of an hour, I've had a lot of questions, people saying, are these valid macros? I've been using these for the past 12 months, backtesting these extensively recently since focusing on this trading plan. These times are working really well for me. So whether they're ICT official macros or not, I don't really mind. What matters to me is they seem to be producing results, so I'm sticking with those times. In the London session, I'm looking at EURUSD and GBPUSD, and my setup is essentially looking for a liquidity sweep on the 1 minute time frame, which creates SMT with the Dixie. I'm then looking for an IFVG, so this liquidity sweep has got to create some displacement. We then need an engulfing candle closing over that displacement, confirming an IFVG. I need a clear candle close over the IFVG. So if it's just closing right on the edge of it and it's not a clear closure above or below the fair value gap, then I'm not interested. I need a clear closure. The entry is going to be on the close of the engulfing candle. So again, this is something that may change moving forward. Because we're inside the macros, I'm expecting price to move aggressively, which means oftentimes price isn't coming back and retesting the inversion fair value gap. So I'm entering on the engulfing candle close. However, as I compile more data, it may become apparent that actually waiting for a retest of the IFVG is a better entry. This is open to change. This may not stay like this, but currently I'm just entering literally at market on the engulfing candle closure. My stop loss is going beyond the swing high or swing low of the inversion fair value gap. And the take profit is going to be fixed at a 1 to 2 RR. However, we are utilizing some trade management here. So we're going to have to identify low hanging fruit here. So an initial draw on liquidity. Once we hit that initial draw on liquidity, we are going to move our stop loss to break even. So ideally, this draw on liquidity will be around 1 to 1 RR. However, sometimes it's a little bit less, sometimes it's a little bit more. The main thing is that I'm trying to get risk free as quickly as possible. Again, once we are taking liquidity, I'm not expecting price to reverse because we're inside a macro and I'm expecting an aggressive move towards an opposing level of liquidity. I'm getting to break even quite quickly on this. The other thing that we need to be aware of is monitoring for opposing SMT. So if we are in a bullish move, we saw bullish SMT, so we have gone long. We need to keep an eye out for bearish SMT while we are in the trade. Dixie versus the Euro starts showing bearish SMT while we're in the trade. This is a real indication that we might need to get out of the trade early before we hit the 1 to 2 RR. So the real key that I've found with this strategy is being able to spot SMT in live time. It's quite a difficult concept to grasp, and it's even more difficult to spot it in live time, especially on the 1 minute time frame. And then it's acting on that SMT once we get it, and ensuring that you get a solid engulfing candle close, not questionable closes, because questionable closes above fair value gaps often lead to losses. So we need to be patient, waiting for a good, solid engulfing candle closure. So SMT is the key to this strategy inside the macro. This is a little cheat sheet that I've put together highlighting the various formats of SMT that may present themselves. So we have EU or GU here versus the Dixie. So in normal correlated markets, we would expect the Dixie to be putting in lower lows while EU and GU are putting in higher highs. If this doesn't happen, this is an SMT, and this is an indication that we will want to be going short on the euro or the pound. Likewise, the other variation of the short here is EU, GU putting in lower highs, while Dixie is putting in lower lows. Longs, we are looking at lower lows versus higher lows, and lower highs versus higher highs. So essentially, if you're looking for shorts on the euro, you're looking at the highs on the euro versus the lows on the Dixie. And if you're looking for longs on the euro, you're looking at the lows on the longs versus the highs on the Dixie. So the opposing sides of the market. Quick checklist just to run over the actual trading plan. 1 minute liquidity sweep, creating SMT with the Dixie. We're looking for an opposing FVG to fail, creating a potential IFVG. We're looking for an engulfing candle close over that fair value gap, confirming the IFVG. Our entry is going to be on that engulfing candle close. We're going to have a stop loss at the swing high or the swing low. TP is going to be fixed at 1 to 2 RR. We are going to go break even after identifying our low hanging fruit to draw on liquidity. We are going to monitor swing highs and swing lows in the trade, being very aware of opposing SMT, which is an early indication that we need to get out of the trade. So once I have refined all of this and got a final trading plan, I will make this available for you guys so you can download it. But this is what I've got initially. With all that said, I hope you found that useful before we even start on the charts. If you did, do leave the video a like. I'd really appreciate it. Leave a comment down below letting me know if that was insightful for you. And now let's jump into the macro from this morning in the London session on Euro and see what was offered. So here we are in replay mode, looking at the Euro on the top here, and this is Dixie below us. So obviously I've only got indicators showing on the Euro. The Dixie is not showing the indicators, but this is going to show us our relevant times. I'm currently on the 15-minute time frame because I'm looking to see if there's any 15-minute SMT prior to the macro opening up. Currently we haven't got SMT, so we can see that the Dixie is making a higher high while the Euro is making a lower low. So this is correctly correlated. This is what we would expect. So there's nothing on the 15-minute time frame giving us a bias going into the session. So I'm going to drop straight onto the 1 minute time frame now. Our macro is going to open at 2:33. So this is macro number 1. And what I'm looking for now going into the macro then is a 1 minute liquidity sweep, leaving a fair value gap, and then an engulfing candle. So that's what's going to trigger the trade. So let's start skipping forward now. So we've got no higher time frame bias at the moment. We are literally just looking for that engulfing candle with SMT and a fair value gap. So inside the macro, we want to be monitoring our swing highs and swing lows. So we've got a low for the session here, and our current swing high is up here. Likewise, we've got our high for the Dixie and current swing low here. So what I've found is the easiest way to track for SMT is to literally follow the range with lines like this, so that I can see exactly what's occurring within the macro. And then we're looking to see if one of these is sweeping liquidity while the other one isn't. That gives us an indication that we may have SMT. So as in this instance here, look, we can see that the Euro has swept the high, whereas the Dixie hasn't. I'm going to zoom in. I can't zoom in too much because I've got both charts on the screen. But in this instance, we can see Euro currently has taken that high. Dixie has not taken the low. So going back to our chart, this is not an entry at the moment, but going back to the chart, we saw Euro has taken the high, whereas Dixie has not taken its low. So we have a higher high on the Euro, a higher low on the Dixie at the moment. So this could be indicating a potential short trade on the Euro. If Dixie takes out this low, then that cancels out the SMT, which Dixie has taken out the low. So both of those now have taken out their respective highs. So we will now move to our high and this to our new low. We have a new swing high here. And we have relative equal lows at this point now. So this is the current range that we're dealing with. So again, Dixie's just, Euro has taken the low by a pip. Dixie has failed to take the low. Dixie has now closed over it. I'm going to monitor this low versus these relative equal highs. So Dixie has pierced through the high. Euro has created relative equal lows at this point. We do have a bearish fair value gap here. So we do have fair value gaps to monitor. So at this point, this is SMT. And this would be showing for a long trade. And let's just mark this as SMT. So that is a higher low. We haven't closed over this with an engulfing candle, so there's no entry at this point. But we are still obviously within our macro. So Dixie continues, has taken that high again. The Euro hasn't, and then this is what we're looking for. A large engulfing candle. So we've had engulfing candle both on the Dixie and on the Euro. This large candle with SMT. It's closing over these fair value gaps, confirming these as inversion fair value gaps. So we take our entry on the close of this engulfing candle. Stop loss is below the low, so this is our swing low, which is this bearish candle here. Our target ultimately is going to be 2R. So we're looking for 1 to 2. We have low hanging fruit. So this is what I'm referring to as low hanging fruit. So as soon as we sweep low hanging fruit, I will be going break even. So this, like literally, we're much less than 1 to 2. 1 to 1. Only like 0.3, 0.4. But I'm expecting this to drive. Large engulfing candle in a macro. I'm just expecting it to go. Which means it may not come back and test this inversion fair value gap. So in my back testing so far, limited back testing that I've done so far, I've found entering on the engulfing candle is the way forward. We do this, so we do get a retest of the inversion fair value gap. So potentially there would have been a better entry waiting for a limit order to be filled on the test of the inversion fair value gap at this point. But from my current trade plan, I would have already been in this trade at market, undergone a little bit of drawdown. Price comes away, right, we've swept that high, so we're now break even. As we've taken this high, we've gone break even. I will run a stop here. So this is just showing us the trailing stop loss. If we do trail it up, so I'm looking at 1 to 2 RR. We can see both have swept these highs. Euro has swept the high, Dixie has swept the low, so there's no SMT at this point, so that's fine. We do need to be aware of this high. Scroll forward. So we've closed over 50% of this fair value gap. So this again should be giving us confidence that we will continue higher. We're looking specifically at 50% of fair value gaps, and if price rejects at 50%, this can show us that this is a strong fair value gap and may reject price. So this large bullish candle closing over 50% gives me additional confidence that this will run. Again, we're monitoring now for our SMT between Dixie and the Euro. So again, Dixie has put in a lower low, Euro has put in a higher high at this point, so there's no SMT as well. We'll go to the next candle. We can see 50% of that fair value gap holding. Strong displacement candle again, driving us up towards our 2R. So we've swept this swing high here, so I'm keeping an eye on this order block and this swing high. And on the Euro, on the Dixie, we failed to take it. So again, this line is showing the same point in time, 214. We put in a swing low on the Dixie and a swing high on the Euro. We've swept a swing high on the Euro. We've failed to sweep the low on the Dixie. So again, going back to our chart, this is a potential indication of a short because we've put in a higher high on the Euro. We've put in a higher low on the Dixie, which is not what we want to see. We would want to see the Dixie sweeping this level as the Euro is taking the high. So eyes are on this now, looking for the Dixie to sweep that low. You can see how this is tricky in real time as you're monitoring this. You would be at break even anyway because you've gone there. So you are risk free, but this is just looking for indications that you may want to get out of the trade early. So the Dixie still fails to take that low, and we are getting a rejection candle here on the high. Still not taking it. So here again, creating more local SMT. Look at this 4 candle pattern. We've created a higher high on the Euro. We've failed to create lows on the Dixie. So this again is showing localized SMT. So at this point in live time, if you were able to spot this like this, I would be looking at maybe getting out of the trade or taking my stop loss up into at least profit so that if we get a reversal, we're okay. So the Euro failed to take that high. The Dixie has taken that low now. So we're showing continued SMT here. The Dixie is going lower while the Euro is failing to go higher. So we're still getting bearish SMT. So we've got bearish SMT that side, bearish SMT that side. This is showing me that I would want to get out of this trade. Likewise, the Dixie is continuing lower, whereas the Euro is unable to continue higher. So we would expect the Euro to be going higher. So we're building SMT at this point with the Dixie while we're in our trade. So this would be a really strong indication to potentially get out of this. Outside the macro now, still got the SMT, so the macro's just finished, so you could potentially just close this out. You're bagging yourself 1.4, 1.5R at this point. And then we can see a displacement engulfing candle lower. So if you'd trailed your stop, you'd have got stopped out in profit. If you saw that big engulfing candle coming lower, you could have closed out at that point. Alternatively, you could be a risk taker and just expect to hold this because we've got equal highs up here. But price ultimately does come down and would have taken you out at break even at this point. So there's potential to bag profit at that level if you'd have spotted the SMT whilst in the trade. What I would also like to note is that if you had waited for a retrace on this, so taking your entry on a tap of the inversion fair value gap, so just waited instead of going on the engulfing close and I got a tap on there, you would have bagged your 2R. So in this instance, what was potentially a break-even trade, if you'd have waited for a retrace just to get your better entry, this would have closed you 2R. We can see if we continue this on now, we do close through that low. And that would have stopped you out. Again, we are creating SMT at this point as well. So you can see SMT is all over the place, but you do need to have extra confluences. You can't just trade SMT. You need to have engulfing candles over inversion gaps. So you're still using other PD arrays as well. But here we've had Euro create a new low. Dixie has failed to create a new high. So we've got bullish SMT at this point on the Euro. Outside our macro, no trade. So that's that done. So that is the London macro #1 with an in-depth walkthrough of exactly what I'm looking for and how I'm managing these trades. It's quite complicated. I appreciate that. It's very hard to do in real time. So this is not the easiest of strategies so far, but I'm sure once I've done plenty of back testing and forward testing and really got the pattern recognition instilled in my brain, this is going to be super profitable strategy. If you found the video useful, please leave it a thumbs up. I hope I did a good job trying to explain what I'm looking for on this one. Comments and feedback, leave them down below. It's always great to hear your thoughts. And do consider subscribing if you're interested in seeing more videos like this. I generally drop videos every single day, or at least every time I take a trade, because this is part of my journaling process and I find it very, very useful doing these reviews, as I'm sure many of you guys do as well. So thanks for watching, and hopefully I'll see you again in the next video.